I'm Rick Kaler. Thanks for joining me. I was recently interviewed by NBC about the impact the coronavirus would have on world economies and investment portfolios. My first thought on receiving the phone call is, why is NBC calling me? I really have no clue about the impact, and being a global economist is not necessarily my day job. Obviously, the worst disruption will be to the economy of China. The 2003 SARS epidemic caused a temporary 2.4% decline in Chinese production. Now, nobody knows if the new epidemic will have the same greater or lesser impact. It's also reasonable to assume that the coronavirus will affect the world economy through disrupted supply chains, reduced demand, and a decline in productivity as people may be quarantined. China makes up 15.5% of the global economy. That's a pretty good slice. Both its manufacturing of products like phones and auto parts and its purchasing of commodities are pretty significant around the entire globe. The Chinese government's attempt to contain the virus with strict travel restrictions and quarantines means that millions of Chinese citizens are neither buying consumer goods nor being productive at work. According to Bob Veres of Inside Information, the Chinese government is pumping an estimated 1.7 trillion yuan from the People's Bank of China into their economy in order to contain the economic damage that it's causing with all the quarantine measures. At the time that I recorded this, the virus totaled more than 80,000 cases and over 2,800 fatalities, most of those in China. In my interview with a specialist in flu viruses and vaccines last weekend, he and his peers believe it will become a worldwide pandemic and the economic crisis will spread outside of China. Again, at the time of this recording, the World Health Organization had not labeled this a pandemic, and yet his point was everybody in his profession is referring to this as a pandemic. Now, one way to roughly estimate the impact is to take a look at similar viral outbreaks. The 2003 outbreak of SARS, which is a previous strain of the coronavirus, saw the S&P 500 index fall 14% over the subsequent 2 months. However, the S&P was up nearly 21% 1 year later. Other outbreaks, the avian flu in 2006 and the swine flu in 2009, the Ebola virus in 2014, the Zika epidemic in 2016, resulted in initial downturns of between 5.5% and 7%. A year later, the markets had recovered by between 10 and 36%. So far, in the 2 weeks after the coronavirus made headlines on January 17th, the S&P 500 index fell 3%. It then rebounded to all-time highs. This was, I'm actually recording this a day after I wrote it, and the markets have started to decline in the U.S. and could very well hit the 14% downturn that we saw from the SARS outbreak in 2003, and who knows, maybe more. Aside from the overall impact on the global economy, there are a number of losers and winners around this on a micro level. The story of Carnival's Diamond Princess cruise ship quarantined in Japan with more and more passengers testing positive for the virus was one of the most visible examples. Carnival stock was down about 17% from mid-January to mid-February. Wynn Resorts has been losing $2.6 million a day since its gambling resorts in Macau have been shut down by the Chinese government. The company's stock is down 15% from its peak. Yum China Holdings, the parent company of KFC, that's Kentucky Fried Chicken, Pizza Hut, and Taco Bell, has also lost 15% of its market value after having to shut down its China-based locations. Apple, which had already announced a reduction in its expected second quarter revenues, reportedly may delay the release of its new affordable iPhone. Now, all of this means that my reaction of "I have no clue" to the query from NBC is about as accurate as any prediction can be regarding the economic impact of the coronavirus. Bob Ferry summed it up well. He said, "History suggests that the market reactions to past pandemics have been temporary, just like all other kinds of market turndowns. Not knowing when to get out and back in to the markets just constrains our options to hanging on and hoping, maybe expecting, that this time around won't be very much different." Well, an outbreak like the coronavirus does affect the economy. It is still likely that the wisest course for investors is to choose not to overreact to headlines, remain with their current asset allocations, and rebalance on drops of target allocations of 20% or more. Thanks for listening.